Welcome to Outside Views. Today we continue our series Briturn, the Obstacles. And this is Chapter 9, Financial Services. As we examine the possibility of the UK joining the European Union again, it's essential to remember that this would not be a simple reversal of Brexit. The UK would need to apply as a new candidate and undergo the rigorous EU accession process, adhering to all the requirements for membership. And today's focus is on Chapter 9 of the Acquis Communautaire, and that is financial services. Financial services are a fundamental pillar of the European Union single market, ensuring that banks, insurance companies, investment firms and pension providers operate under a harmonized regulatory framework. The EU's Financial Services Acquis sets out rules for the authorization, operation and the supervision of financial institutions, providing legal certainty and consumer protection while promoting financial stability. For the UK, joining the EU again would require aligning its financial regulations with EU standards, reversing key post-Brexit regulatory changes and submitting to EU oversight in areas where the UK currently has independent control. The first major principle of the EU Financial Services Framework is the home country control system. And this principle allows financial institutions to operate across the entire EU from a single regulatory base in their home member state, either by establishing branches or offering cross-border services. Before Brexit, UK-based financial institutions benefited from the system through passporting, which granted them access to EU markets without additional regulatory approvals in each member state. Brexit ended this arrangement, forcing UK firms to either relocate or establish EU subsidiaries to maintain market access. To join the EU again, the UK would need to reintegrate into the system, aligning its regulations with EU directives and allowing EU authorities to oversee certain aspects of its financial sector. Banking regulation is a critical component of this chapter. The EU has strict rules governing the operation and supervision of banks, ensuring financial stability and consumer protection. And these rules include capital requirements, risk management standards, and mechanisms for dealing with failing banks. Since Brexit, the UK has diverged from some EU banking regulations, particularly in areas such as capital buffers and liquidity requirements. Joining the EU again would require the UK to adopt the latest EU banking regulations, which may limit its ability to tailor financial rules to its domestic economic strategy. Additionally, the UK would need to re-establish its participation in the European Banking Authority, the EBA, an institution that plays a key role in setting and enforcing banking regulations across the EU. Another major area of financial services regulation is insurance and supplementary pensions. The EU Solvency II framework sets out risk-based capital requirements and governance standards for insurance companies operating in the single market. And this framework ensures that insurers maintain sufficient financial reserves to meet their obligations and protects policyholders from insolvency risks. Post-Brexit, the UK has begun reviewing Solvency II with an eye toward greater flexibility for domestic insurers. However, joining the EU again would require the UK to fully adopt Solvency II, removing any post-Brexit regulatory divergence and ensuring strict alignment with EU insurance supervision standards. The investment services and securities market framework is another critical aspect of EU financial services law. The EU's Markets in Financial Instruments Directive, or MiFID II, regulates trading venues, investment firms and financial products, ensuring transparency and investor protection. Since leaving the EU, the UK has introduced modifications to MiFID II and the rules to create a more flexible regulatory environment for its financial sector. However, joining the EU again would necessitate re-adopting MiFID II in its entirety, as well as submitting to oversight from the European Securities and Markets Authority, or ESMA, which supervises financial markets across the EU. And this could be a contentious issue for UK financial institutions that have enjoyed greater flexibility post-Brexit, but would have to comply with EU-wide rules upon membership. One of the biggest challenges in this chapter is the political sensitivity surrounding regulatory sovereignty. Financial services are a key sector of the UK economy, particularly in London, which has long been one of the world's leading financial hubs. During Brexit negotiations, maintaining regulatory independence for the City of London was a major priority for UK policymakers. Joining the EU again would mean accepting the EU's regulatory framework and the oversight mechanisms, potentially reducing the UK's ability to set independent financial policies tailored to its global competitive position. And there's also the issue of financial stability mechanisms. The EU has developed various frameworks to address financial crises, such as the Single Resolution Mechanism, the SRM, which deals with failing banks, and the European Stability Mechanism, the ESM, which provides financial assistance to Eurozone countries in distress. And while the UK was never part of the Eurozone, joining the EU again will require discussions on whether the UK would contribute to these financial stability instruments and how it would participate in future financial crisis management policies, because the euro is another point that's here on the table. A further consideration is the EU's approach to anti-money laundering and counter-terrorist financing. The EU has implemented stringent rules to combat financial crime, requiring member states to enforce rigorous due diligence and reporting obligations for financial institutions. The UK has historically been a leader in financial crime prevention, but Brexit has led to some divergence in these rules, and applying is still another thing. Joining the EU again would mean adopting all EU AML regulations, submitting to enhanced scrutiny from EU authorities, and rejoining mechanisms such as the European Financial Intelligence Units network. But how difficult would it be for the UK to complete this chapter? From a mere technical perspective, the UK already has a highly developed financial regulatory system that closely mirrors EU rules in many areas. The main challenge would be reversing post-Brexit divergences, adapting to EU oversight mechanisms, and addressing political concerns about regulatory sovereignty. Additionally, UK financial institutions would need to prepare for a transition back into the EU regulatory system, which may involve restructuring operations and adjusting compliance strategies. One key benefit of joining the EU again is regaining access to the EU single market for financial services. Many UK financial firms lost significant business opportunities when Brexit ended their passporting rights. Rejoining the EU's financial services framework would restore seamless market access, reduce compliance burdens, and improving the UK's attractiveness as a global financial centre. Additionally, aligning with EU financial regulations would enhance regulatory predictability for businesses, investors, and consumers, fostering a more stable financial environment. However, there are trade-offs. The UK would need to relinquish some of its post-Brexit regulatory flexibility and accept decisions made by EU institutions that govern financial markets. The extent to which the UK government and financial industry stakeholders are willing to make these concessions will determine how smoothly this chapter could be completed. In conclusion, Chapter 9, the financial services, highlights both the opportunities and, of course, the obstacles of a potential Briturn. While the economic benefits of regaining access to the EU's financial market are clear, the regulatory and political challenges of aligning with EU rules will require careful navigation. For the UK, this chapter is not just about regulatory compliance. It's about rebuilding trust, ensuring market stability, and integrating into a financial system that operates on shared European principles. So thank you for joining me on this 9th step in our exploration of the obstacles to Briturn. And if you found this analysis insightful, please like the video, share it, and subscribe to Outside Views for more in-depth discussions on European politics and, of course, the whole post-Brexit affairs. Let's continue the conversation in the comments, because I would like to know, what do you think about the UK's ability to align with the EU's rules on financial services? I look forward to your thoughts, and as always, stay informed and see you in the next video, one of those you find right here in the end screen.